Hello, class. Today is a special episode on the Builder to Contributor program. This is my ultimate desire for every household I come across, for all my contributors, for all my clients. This right here, what you're about to engage in, what you're about to see, is my whole idea, my whole financial picture of your kingdom, your household, your influence, okay? And I'm going to use my mom as an example of how she is establishing her kingdom financially, okay? Let's dive into it. I want to show you how we're going to talk about insurance, banking, and real estate, how we combine it all together, right? No matter where you're at financially, I can serve you, okay? That's why I have that Patreon page. That's why I have this YouTube channel. That's why I reach out to you, call you, email you. You know, we talk, we do Q&As together. Comment below if you've been on a Q&A before and give your testimony. Let me know your thoughts and how you thought of it, okay? So I've had a lot of people asking me about the infinite banking concept, or, you know, how to become your own banker, you know, talk a little bit more about the insurance. Okay, we're going to dive into that as well. All right. So I'm going to give you this system right here of how my brain works when I'm looking at your finances, right? So, for my mom currently, we make money, right? We have a job, we collect money, it goes into our checking account, okay? And we both have a business together, okay? I've got this business, the YouTube channel, and she's got the real estate business. She's looking for her very first deal, her very first fix and flip, so that she can drastically change her life, right? Now, when she does this, right, that money's gonna go into this account, this checking account, right? And you know how I always say, if we've got debts, right, if we have debt, if we want to get out of debt, become debt free, what do we need to do? We need to get the debt weapon, right? So for my mom, we've got a unsecured line of credit for $3K, okay? And she's currently in the velocity banking, right? She's currently doing that right now, right? So she makes the money. Before she uses this money, she's gonna come right here and use the line of credit to do what? Pay bills, pay debts, and fund her policy, okay? Pay bills, pay debts, fund the policy. When we pay bills via the line of credit, right, we're taking money from the line of credit, right? The money goes right back into the checking account, which pays the bills, right? We use the line of credit to make chunk payments at debts to what? Increase cash flow, right? And then we use the line of credit to fund our policy to create legacy wealth, tax-free wealth, right? Cool, this is all simultaneously happening all at once, right? So the idea is, when she's paying her bills from the line of credit, building her what? It's building her credit, right? Which is building her capital, which is gonna what? Give us the opportunity to increase this line of credit so that we can chunk faster at our debts to increase cash flow, which will come right back here, right? And right here, this policy, okay, we're currently working with Mass Mutual, okay, it's one of the four majors. It's one of the four major mutual life insurance companies out there. And we designed a policy for her where we're using $300 a month from the line of credit. Get this, ready? $300 a month, that's $3,600 a year, okay? This is us creating the private bank account, which is gonna, at some point, this will no longer have use for us, right? Where we no longer have to use necessarily banks to store cash, right? We can store our cash in what? Insurance, banking, real estate, right? This is what she desires, right? So whenever I'm talking to families, I try to find out, what's your purpose in life? Why are you here? Where are you going? Where are you headed? Where you want to be, right? What is your thing? What is your talent? Your purpose here? Your kingdom authority? Why are you here, right? If I can figure those things out, financially I can create this blueprint, okay? So for my mom, boom, we know it. We know the end game. Real estate business, right? We want to get away from this, right? But we got to work towards it, all right? So coming back here, get a policy, right? Which is a life insurance asset, okay? This is not an investment. We are using this as a hedge to grow money tax-free. If you want to design a policy properly, what do you need to do? You need to find an agent, an insurance agent that you know, like, and trust, number one. Number two, you want to find an agent that knows what they are talking about when it comes to the infinite banking concept, becoming your own banker, bank on yourself, velocity banking, okay? The terminologies are all the same. It's just different marketing tactics, okay, when it comes to the terms, but it all means the same, all right? Then you got to figure out, what type of policy do I want? Do I want to go with IUL or whole life? Okay, both have their pros and cons, both have their benefits and features. At the end of the day, it boils down to the customer. Do not be sold into something. Understand what you are buying so we avoid buyer's remorse, okay? And the other most important thing is understand the use. How are you going to use it, okay? So for my mom here, we want to be able to leverage this policy so that we can invest in more real estate, so that we can pull money tax-free, use it tax-free, pay ourselves back tax-free. That's the whole goal. If I have a policy that's not designed that way, if I can't pull money from it year one, if I don't, get a certain rate of return that's guaranteed with dividends, not going to be good. If my policy is designed for death benefit, not cash value performance, we're going to have an issue, okay? So we got to make sure we design our stuff right. So for mom, boom, we're starting off small so we can finish strong, right? $300 a month, $3,600 a year. Here's our MEC limit, $10,800. Okay, your MEC limit stands for a modified endowment contract, which stands for the ability, the amount of money you can contribute to your policy, the max amount, kind of like your Roth IRA. You can only put in how much? $5,500, right? Or like $6,000, I think. But with a insurance policy, you, the client, tell the insurance agent how much money you want to put in starting out and how much you would like the ability to put in. Very key, important things. That will determine your cost of insurance. That will determine how the insurance agent designs the policy. And then when you have someone like me in your corner, whether you go with me or someone else, we will be able to discuss. I can be, hey, listen, it's not designed the way you just told me you wanted it to be. Or I can be like, hey, that thing was designed the way like you wanted it to be. Cool. So for mom, boom, we got this 10,800 MEC. We're gonna start out for the first couple years, putting in this much, do some deals, make some money, pay some debts off, right? Increase cash flow, drives it back here, increase capital so that I can continue to increase the line of credit, okay? Every time I put money into this policy, it is going to immediately earn interest, okay? Anywhere from 4 to 6.5% or higher. The reason why I said or higher is whenever interest rates go up in the market, so will life insurance policies. Those will follow suit. When interest rates are low, same thing. Those interest rates will go down. The benefit is you always have a guaranteed floor of 4%. So no matter what, with this specific policy with this company, they're always going to give us 4% no matter what. Cool. So I never lose money. I followed Grant Cardone's rule. I followed Warren Buffett's rule. Never lose money. Cool. Now, as I'm paying debts, as my mom is building credit, as she's funding this policy, right? All this money is going to come back right here, okay? It's going to sit there. This money will be higher, right? So it's always doing this. Boom, right? It's rotating. The cash flow never leaves mom, okay? Because mom is the greatest manager, the greatest influencer, and the greatest treasure, right? Women, gotcha? Are you following me? So if the woman of the household can manage the finances, right? What does it say? By the woman's hands, she builds the house, right? What are we building together? What are we building, right? What are we building and why? To do what? To contribute, right? I want to be able to build something in this lifetime on earth, the kingdom, so that I may contribute to my kingdom citizens, my offspring, right? The kids, the nephews, the nieces, the grandchildren, the brothers and sisters, the moms and dads. Got it? So that you can be a cheerful giver and bless others so that they may establish their kingdom, right? Because everyone is a king. There's a king inside of you. Do you understand that? So if you can get this, if you can understand the benefits of leveraging debt, doing velocity banking, right here, to then acquire assets, to then use that same assets to then come over here and invest money, right? Here's where the terminology shifts, and here's where most people get confused with the word invest, right? Some people think if I invest money, I want to grow the money at a what? An interest rate, right? So right away, your mindset has been contaminated to think what? ROI, right? Nearly every financial person will sell you on that, ROI. But see, my Uncle Grant really talks about this multiplying effect, this 10x effect, right? Where this means nothing. ROI, right, should be for, in my opinion, storage, hedging, tax-free, okay, guarantees, okay? When I invest money, my goal is to multiply it. I don't want to invest money and only earn 6% or 8% or 10%, 9%. I don't want to earn that on an overall basis. In my mind, if that's occurring, then that mindset, that idea is for on this side. My storage money, my wealth transfer money, my guarantees, my hedging. But if I'm going to invest money, I want to make sure I've got 100K in cash built up, whether it's in the debt leverage, whether it's in cash, or whether it's over here in cash value, right? Whether it's in the cash value, as long as, just like Grant says, get to 100,000 first. In the meantime, pay debts off, build the credit, save money, right? Grant Cardone talks about saving 40%. 40%. That's what Grant wants us to do. Save 40% of our money. Can we do that? Not when we're in debt. Not when our expenses are high. Not when our credit's terrible. I don't see how we can do that, especially as Americans, right? Even immigrants won't be able to do this when you've got debts and bad credit, right? Not going to be able to get there effectively, okay? The other issue is you can't just save the money and let it sit. Has to be being used constantly in this flow. Has to be being used all day long, okay? So, come over to here. I'm investing money with the intention of multiplying it, right? Whether it's 3x, 4x, 5x, 10x, beyond that, who knows? The money makes a profit, okay? I've got my principal, the original money that it made, plus a profit, all right? And the whole idea, like I said, whether I pull the money right here, this cash, whether I pull it from here, my debt weapon, or I pull it from a policy, right? See how money borrowed, zero cost? When I borrow from the banks, I'm gonna get charged an interest rate, right? How do we avoid that cost? By doing velocity banking, so you minimize. But if you wanna go to zero cost with an insurance policy, no matter how much money I borrow from the policy, no matter how much money is in there, it will never lose its value. So if there's 200,000 in that policy and I take 150, or I take 100,000, let's say, right? I take 100,000 and there was originally 2. Naturally you're thinking, okay, as soon as I pull money out, there's going to be 100 left. It's not the case with insurance, right? Mass Mutual is going to give me 100,000 of their dollars, okay, as a what? As a loan. Don't get scared. See, what's interesting is a loan in the insurance space is calculated simple interest, okay? Now, here's where the math gets a little funny. If I borrow 100 and Mass Mutual is charging me a simple interest rate, let's say 5%, right? But I have 200,000 growing at this rate, mathematically what happens is the cost of borrowing offsets becomes zero. Because once I invest the money and I multiply it and I get my principal and I make my profit, what happens? I take the I take the principal and I pay myself back, and the profits can go wherever I desire, whether it's back to the debt weapon, whether it's put more in the policy, whether it's more real estate, business, whatever she likes, whatever mom likes. Maybe she puts it in a Denzel fund, a Denzel trust, right? Maybe she puts it on the kids, right? Gets a kids trust, that profit, insures all the kids, right? Has a business. Oh man, I hope this is making sense. If not, comment below. You know what to do. Reach out to your boy, the finance geek. Reach out to your adopted son. I'll do what I can to serve you, right? So this is powerful. The Builder to Contributor program, that's what I'm calling it. That's what I like. That's my philosophy. That's my way of thinking. That's what I want to bring to you, to your household, For all my tier 3 contributors, you already know we're in the process of this. Whether we're on the velocity banking side, we're on the credit building side, we're on the policy side, we're putting policies on the kids, we're putting policies on ourselves. We're establishing the kingdom. Oh my. Oh my. This is what you call a principle. Principle. This is interesting. The word principle is so interesting to me. So interesting. Let me get my notes. Principle is a fundamental truth or proposition that serves as the foundation, right? As the foundation for a system of belief or behavior, or for a chain of reasoning. A chain? Oh, am I making sense? A chain of reasoning. Why we do what we do. What's the end result? What's the end game? What's the legacy? What's the legacy? What are you leaving behind? Will your name be remembered? Right? This is powerful. My name is Denzel. I hope you've enjoyed this. If you got any questions, reach out to me. If you want to find information on this, getting a tax-free bank set up for you, a privatized bank, reach out to me. If you want to start working on the velocity banking, get more information on that, check out my Patreon page. Okay? I'll have links in the description. Matter of fact, I got another tip for you. I feel like doing it. You want to get your credit right? Here's something called, what's it called? Oh my goodness. I think it's called Credit My Rent. Credit My Rent. I'll have a link in the description. I met a gentleman recently. Has a business. He's in real estate, rentals. He's got a couple things going on. When I was looking at his work, I was looking at his website, and I came across this, Credit My Rent. Very interesting. You can essentially report your rent payments to the credit bureaus, TransUnion, I believe. And that's a way to build your credit score in a very short period of time. And with that service, they can actually go back up to 2 years with the service that they provide. They can go as far as 2 years of credit history of you paying your rents, right? Imagine if you could have your rents be reported to the credit bureaus. That increases your credit score. That what? Gets us to the debt weapon so that we can start velocity banking, so that we can fund our policy, so that we can increase cash flow, so that we can build credit score. Oh man. Oh man. Okay, so yes, check that out. Very important. Not kidding. Do it. I'm gonna have all the links. It's gonna be a review of everything in the description. Have a wonderful day. God bless.